The wonders of modern communication. I'm sitting down there waiting for me to come on. They're all phoning me and texting me, thinking, what's the problem? I'm sitting here. I'm not going to do a runner. Okay, well, thanks very much indeed. I'll try and sort of rattle through these slides. If anyone wants any copies, then just please let me know at the end. And really what I'm trying to do is trying to give some examples of how blockchain and digital assets or cryptocurrencies or tokens or coins or whatever you want to call them. For those in this room, I think of them as green shield stamps, but unless you're over 40, you're not going to know what I'm talking about, but I can always explain that to you afterwards over a beer or something. Okay, so what I want to cover is looking at sort of blockchain and sort of, you know, how does it work and what does it enable? What's the impact on finances? And this is very much coming from having been in the sort of financial service sector for on and off for about 30 years. And how will it impact on different parts of the financial services sector? What sort of funds will that then enable us to create for really retail and having that re-engagement on an ongoing basis? I've titled it sort of the Battle of Asset Managers. As Jane kindly said, we write a weekly analysis which looks at how, where and why blockchain is being implemented and how, where and why digital assets are being used. And quite interesting. I personally don't think Facebook give a jot about the unbanked. I think it's just a smokescreen. I think what they're after is the asset management world, because they're going to make so much more money if West Coast America can take over East Coast. So we'll touch on that. The other thing we talked about a little bit this morning about this whole thing of collaborative capitalism, whereby in the past what happened is you'd invent an idea, your USP, your unique selling proposition, and you really kept that really, really tight. You didn't actually do press releases. You didn't hopefully give a gaffe away at a conference because you didn't want anyone to know what you were doing because that was something that was unique to you. But what we're now seeing is people are opening it and they're actually going to their competitors and say, look, we've developed this an idea. We'd like you to come on board in a collaborative way. And maybe with consensus and all the rest of it, we've seen that being an advantage that blockchain have brought to different industries. And then finally, the sort of bottom-up, top-down approach, which we'll come on to. And then the marketing is at the end, digital bites, which you all cannot leave unless you actually sign up as clients, so be warned. Okay, so I'm not going to read through them. There's been a number of people who have been various parts of industry. It was one of the reasons why I got involved in blockchain technology. I'm not a technologist. I'm also horribly dyslexic, so I couldn't even spell technology. But what encouraged me, or what pricked up my interest was I believe that in the asset management world, effectively, we have a zero-sum game when it comes to investing. And what I mean by that is that there are only a limited number of currencies that you can buy and sell. And here we are in London, and you own a flat in London, and you want to sell your flat, and you want to buy a boat in, let's say, California. So you have to sell your property, you then have to sell sterling, you then have to buy dollars, and then you buy a boat. And then you get bored with that and want to buy, I don't know, you want to buy a Ferrari in Italy. So then you've got to sell the boat, sell dollars, buy euros, buy a Ferrari. So it's every time you switch and move money around, it's always within a foreign exchange that you'll know and understand. And all of a sudden, this crypto thing pops up. And it's not priced in dollars or euros or yen or Swiss franc. It's priced in crypto, whatever that may well mean. And I think that if we see just a very, very small leakage coming out of the current world, and most assets are priced off of international currencies, we could well see just a huge explosion in the value of some of these cryptocurrencies, which I'm not saying is a good thing, but I can see that's where we could potentially see this market actually heading. So what does blockchain enable? Most of you have far greater expertise than I do, but essentially what I love about is the bottom bit. Talking to BP now want to be a digital company. That's what they're aiming to be. And they look at numerous transactions and numerous propositions of how to use the technology. And they say they'll only do it if they believe it can actually fulfill that, a trusted transaction over the internet. So for me, that's sort of a really simplistic way. The other way of looking at it, which is even easier, I think, is just think of blockchain as an Excel spreadsheet on steroids. Simple as that. It's basically a repository of information, of data, whereby instead of being held just on one laptop, one computer, it's held in multiple different places. So it's fantastic for disaster recovery, which if you've anything with financial services, you'll know how your compliance department will always be banging on about how important that is, obviously, as an idea. Obviously, different types of blockchain. You've got the sort of, the private and the public. Quite interesting. A lot of people were initially about sort of certainly 9 months ago talking about, oh, well, what we're going to do, we're going to see Apple, for example, and they're going to create some sort of token and they're going to put it onto a public blockchain. In theory, sounds a good idea. But what happens if, let's just say, Fidelity, who seem to love all this sort of stuff, go and buy $10 million worth of Apple shares? And then there's some sort of node in one of the stands, Turkmenistan or Kurdistan, they're not regulated. They say, oh, great, we've got a buy order coming down the line here for 10 million. Chances are the price of Apple shares are going to go up. Well, we just slip in a 100,000 order before we verify it, and then suddenly you find the share price goes up or down. So clearly, some transactions in the financial service sector are not suitable for public blockchains because you can't control front-running and information like that. So in terms of the benefits, again, this is just a very, very basic sort of summary of some of the things and some of the ideas where people are looking at and consistently keep coming back to how and why blockchains are being used. But I think this idea of smart contracts, I don't spot any lawyers that I know in the room, but I know the lawyers just keep on saying they're not smart and they're not contracts. And it's a bit like artificial intelligence. It's not intelligence. It's just number crunching to look for trends and look for analysis. So whilst I think smart contracts are going to be really, really good, if you remember one of the questions you just seen from the presentations, it mentioned something called LIBOR. Well, are you all familiar with LIBOR, roughly? Yep. Okay, so let's say we had an agreement and I owe you £10 million and I've got to pay you a percentage over LIBOR. And if I don't pay that percentage over LIBOR, then in theory, you can actually take action against me. Well, in less than a year's time now, LIBOR won't exist. So you'll have a smart contract spinning around looking for LIBOR to be LIBOR plus. How can it execute it? So the chances are every smart contract is probably going to need a wet contract, i.e. a bit of paper, unfortunately, with a quill pen, so the lawyers can still earn their sort of pound of flesh. But that's the reality of where we are still at the moment. I won't go through this. Strengths, weakness, opportunities, and threats. And this has really come about of talking to a number of our clients. We deal with a number of publicly quoted companies, and these what they ascertain as some of the good things, the bad things, and the things they're just not quite so sure as the technology is developing, albeit at a reasonable rate. Okay, so the impact on sort of finance. And a couple of things here sort of stick out to me. First of all, you have Stellar. Not Stella McCartney, but Stellar, the blockchain, being used by IBM. So here we have a global national company looking to use blockchain technology, looking to use a digital asset to move money around different departments within their organization. The JP coin, you got 1 minute the guy saying, I'm going to sack you if you trade in cryptocurrencies. At the weekend, he was basically saying that we look at blockchain and we look at digital assets and see, is it something we ought to be copying and doing ourselves? So, within a matter of, 9 months, it's completely flipped on its head. In terms of digital assets, I think the whole concept of digitizing, tokenizing property is just like nuts. The REIT market is $3 trillion. There's 80 million people indirectly or directly exposed to tokenized, unitized properties in the REITs market. Yet the average discount on a REIT was 18% early this year. So why tokenizing, giving it another name, is going to create liquidity is beyond me. But I think what is going to happen is the regulators are going to look at it and say, is it right that when I was managing money, on a Monday I would go and buy BP shares, as an example, and I'd sell them on a Tuesday because I was stripping the dividend? Completely legal, but lots of transaction charges. And if you look at the income streams on shares as dividends, bonds, paying a coupon, property paying rent, and those income payments are paid typically every quarter, every 6 months, and they are paper-based. Very often they're wrong. They don't get the voting right. They don't know who the shareholders are. Alternatively, if you take the same assets and digitize them, 24 hours a day in real time who owns the assets and who's entitled to the income based on the number of minutes that they've held the investment. Now, one of the tenets of financial services in the UK and across the world is treating your customers fairly. And if you don't know who your customers are even, then I think it does raise questions. In the paper-based system, they don't know who the customers are. And if any of you sort of follow the UK personal financial press, there's a fund manager called Woodford, had a nearly £11 billion fund. Today, you can't get your money out because the administrators, the regulators, the fund manager didn't keep an eye on the ball. And I think as a result of that, we're going to see an increasing clamour for more digitisation. I've put bonds down there. Bonds are a really interesting part of the market most people are ignoring, but a really, really great way that the technology can be used to raise money for small, medium-sized companies. Right now, it's very difficult, unless you want to raise 100 million plus, to actually raise money on debt markets. But you've got the companies like Societe Generale, BBVA, Nuvura here in London, all claiming that the cost of issuing debt is going to come down by 90%. So that's why I think it's going to take out the peer-to-peer market. You talk to the banks got loads of corporate clients that want to do $5-10 million dollars type transactions, and loads of private clients that want to get access and get 7, 8, 9, 10% by investing in something like Tesco's or something, or companies that they know. So I think that's going to be quite an interesting thing going forward. And then the final one I'd like to draw attention is re-engagement. A really interesting project going on in Australia. Nothing to do with Jane, although I think it might be one of Jane's old boyfriends. I'm not sure. He said he knew her very, very well. And what they're doing, actually holding the AGM and all the voting, all the proxy voting in real time on a blockchain. Because they've been doing it in Australia with government voting and national elections, and they've found that there's been a much greater engagement. More people have actually got involved and voted as a result of seeing their questions and their answers in real time in a public arena. And this company, it's one of the biggest insurance companies in that area. I can't say more than that because for some reason I want to keep it all super confidential. But if this turns out to be a success, I cannot believe that every single quoted company in the world will not at least look at it. It's much, much more environmentally friendly because they're not going to be sending out lots of documentation, and it's re-engagement with their shareholders, stripping away the custodian and nominee, which means at the moment it's very difficult to communicate with the people who effectively own your business. Ripple and Swift, well, I don't think much really needs to be said about that, apart from Swift, so they can do everything that Ripple do, so why haven't they? Comes down to Australian Oxo. They just got away with it. They had a monopoly. So we've seen a classic example there of how the technology is being used to shake up a massive market, which we're all actually exposed to, believe it or not, on a day-to-day basis. Here's a couple of ideas in terms of sort of funds for the future. Having run funds for years and run a fund management business, you'd go, well, you must buy our international fund. Really? Why is yours any better than anyone else's? Whereas if you actually go to someone and say, look, do you think the trend for socially responsible investing is going to be something big over the next 5-10 years? Yeah, I think possibly. Or do you think electric cars are going to be something which is going to be of interest and could make money? Possibly. Okay, so why don't you have a fund that invests into the components that make up electric car batteries, i.e. commodities? Because right now, most commodities you can trade for 5 hours a day, 5 days a week. But there's no reason why you couldn't see all commodities being a stable coin, a pegged coin, a linked coin, whatever you want to call it, and traded 24 hours a day, 7 days a week. And there's numerous ideas and numerous companies that are looking at company doing that. In terms of access to real-time information evaluations, this whole thing of why get your income, why get the information on a half-yearly basis, as opposed to getting it in real time. And of course, at the bottom, re-emphasising the problem that we've seen of poor transparency, inadequate regulation, dreadful compliance, and it's affecting individual investors in their pension funds and PEPs with that £10 billion fund run by Neil Woodford, who was a very, very good fund manager. So the asset management battle. If you've got a company that has 62% of exposure to America, and it's actually got 6.2 trillion, I think slide was out of date because the market went up last week. They're kind of exposed to yesterday's economy, in my opinion, as opposed to Facebook with 41 billion of spare cash, with a distribution that is kind of hardly anything in America in relative terms. 170 million is nothing when you've got 2.3 billion. And they're exposed to these faster growing, younger populations where the governments know they've got to encourage their citizens to actually save. So if Facebook came out with an electric car battery fund or maybe the Global 100, and they're actually doing it at a very, very small price in terms of the annual management costs, I can easily see Facebook becoming a very, very big asset management company. And quite frankly, what can the incumbents do about it? Because they are just tiny in comparison. So we talked about this thing about changing behaviour. Whether you like it or not, nudge economics has been around for around about 18 years. So people are nudging and changing the way you behave and giving you incentives to do so. So the bottom one there, SC Johnson, they've got projects going on at the moment in Indonesia, 9 different villages where they're paying children and ladies typically in a digital format. So when they paid them cash, the husband came home, clip around the ear, back down the local boozer. Now they're on a mobile phone, which is typically sort of, coded with a fingerprint, and they've recycled 10,000 tonnes of plastic. And SC Johnson can see from the money they put into the project the amount of plastic's being recycled, but probably more importantly, how many books, how much food, clothes, medicine have the tokens been recycled back into. So we're talking about corporate social responsibility. Shell main board won't get paid bonuses or the most of the salary unless they can prove they've done something about their corporate social responsibility. Great way how, again, tokens are being used to do that. Other impacts of sort of this thing, talked about this collaborative capitalism. Trade Lens, part of Maersk, developed a system in the supply chain and now opening it up for other people. Carrefour, I don't get it, but my kids love it. If you have a QR code on a bit of chicken and you know where it's come from, then they're more excited about that than anything else because it's provenance, it's traceability. And the good thing from Carrefour's point of view, they can not only sell more but charge more for it. So if you're looking in the financial service, what businesses are you going to invest in that they could actually implement that sort of technology? I'm coming to the end, so I'll just rattle through. So in terms of the adoption being driven, and for me, this is the really interesting thing, in the sense that a couple of years, it was very much bottom-up, it was very much ICOs. I don't believe, Jane, you've got anyone here pitching for an ICO raising money? No? It would have been, basically, the whole thing would have been paid for by ICO sponsorship, something with huge systemic risk, because it was priced basically off of Bitcoin and Ethereum. Now we're actually seeing top-down governments are actually investing in this sort of stuff and developing their own cryptocurrencies. And Facebook, again, classic example. They're looking to put potentially $1 billion into making this as a global currency. And so it's being driven in a very, very different way, which is why I think it's very much here to stay. And in terms of how to keep up to date, well, this is what we produce as in an attempt to help people to understand, which is basically an analysis, which is looking at who, what, where, and how the technology is being used on a multi-jurisdictional and a multi-sector basis. So a very, very quick run-through of how we see it affecting the financial services sector, not just in this country, but on a global basis.
Thanks, Jonny. That was really great. We will have some time to take some audience questions, but I just wanted to take up the issue that you mentioned about voting, because we actually have a blockchain voting party in Australia. You can join the Flux Party, and the Flux Party's basic platform is you vote for us and we'll let you vote on everything. So maybe one will come up in the UK as well. I think that was Horizon State that you might have been talking about.
Yep.
But anyway, let's take some questions from the audience. There's a hand
the
up
lady
here.
with the camera.
Just wait for the mic.
Can we wait for, yes, just
and then up the back here.
Thank you. One of the reasons I came into this talk, you was talking about reward points. So how do you see blockchain affecting reward points or changing that, the way that we do rewards at the present moment? Not necessarily with airplanes and hotels, but more for smaller businesses, because obviously blockchain is changing from the bottom up rather than the top bottom. So yeah, how do you see it affecting reward points and reward systems and stuff like that?
Okay, so if you look
loyalty points, sorry.
So if you look at the statistics, basically it's much more effective to actually be a farmer as opposed to a hunter. I look after your existing clients rather than keep searching for new clients all the time. And if you look at Tesco's as a good example, I appreciate it's a big company, but it was arguably one of the things that turned that company around, which was their club cards reward points. Now, you may not be familiar. If you have £10 worth of club card points, you can get £10 off your groceries, or you can go to Pizza Express and you can get £30 off your, Pizza Hut, £30 off a meal. Or you can go to Eurotunnel and get £30. So I would buy your club card points within reason all day long at £25 because I go to France quite a bit. And therefore I know I can turn my 25 into 30 overnight. So at the moment, most loyalty schemes they're just a pain in the neck. In my wallet, I've got Cafe Nero, because I quite like their coffee, on a bit of paper, and it's like, it's the old John Bull printing set. As a kid, they're still stamping bits of paper. In my phone on my left-hand side, I've got 4 or 5, I've got Nectar and Avios and Tesco's and Waitrose, and none of them talk to each other. And if I can be bothered to get around it, they are quite helpful and useful. But I think what we're going to see is them being used and having that, I hate the word, but interoperability. So they'll actually be able to sort of be merged and used in a way, and I think smaller companies will be able to do it. And then on top of that, you've got the whole advantages of intangible liabilities of current loyalty schemes, and there are ways to get them off the balance sheet and actually create a tangible liability which isn't detrimental to the company. So I think it's something, and I think it's one of the biggest things that Facebook are doing, is bringing up this whole idea of digitising to buy your data, because they've got another project running where they're going to start paying you for your eyeballs and time that you spend on screens. And I think that really shouldn't be underestimated. There was a question right at the... Yeah.
Yeah. Although we all know that smart contracts are not legal contracts itself, because it's basically instructions like, if I do this, then this gets done. To make it legal, one would has to combine the legal contract, which is on paper or digital form, and combine it with a smart contract to create a Ricardian contract. Would you see more of these type of Ricardian contracts be used in the future?
Yes. That was easy. Right, one more question, then I'm just conscious of time. Lee, down the front here.
Thank you. Your last slide up there was the newsletter.
Yep.
It's actually the only newsletter I read. I think it's brilliantly put together. But I wondered, what are the criteria for selection for what you send out?
The main selection is feedback from it goes out to several thousand people now, and it's feedback in terms of what are they interested in. The idea behind the analysis is it is analysis as opposed to a press cutting service. So I particularly like that article on Facebook but Facebook versus sort of BlackRock. So it's just trying to get people to think, well, they're doing this, why are they doing it? How does that work? What we don't do is any pitching. There's no advertising. There's no money raising. But it's what it's being used for and what it's designed for. And we've actually got one of the. I'm not going to look in. But there's a client in this room. Is a client of another firm of lawyers. We've been producing this for the last 18 months for the lawyers, and he's been reading it as crypto bytes. And when I said, well, you've been getting digital bytes, he looked at me as, no, don't. And when I said crypto bytes, because they've been sending it to their clients. So basically, they take the content and they top and tail it. I must stop doing that. They top and tail it, and then they send it out to what they're doing. Or other people just take 3 or 4 stories a month on, say, retail, or 3 or 4 stories on energy, and then they send it to their clients. And I'm yet to find one of the lawyers or accountants or consulting firms that take it, and they say, Jonny, as a result of that, we've done some blockchain or digital asset business, but it's an excuse to reach out to their clients to say, what about this? Have you seen that? Because most people just don't understand. They keep saying, show me an example. There are hundreds of examples. That's what we're trying to do, and that's why we tend to write the stories that we do in there.
Great. Well, thanks very much. Let's have a big hand for Jonny and a